I'm very excited. This government means business, and I live in London and I see the kind of excitement in the investing community.
The sloth in job creation partly also reflects the sloth in investment.
The fact that job will get automated is not an issue.
If we can't ship jet engines from the United States to our airlines around the world, we're going to employ fewer people in the United States.
I will invest in a robo has become much sooner than what it used to be, because robots have become cheaper.
If the pace of reform fails to pick up, companies may look elsewhere. Where is elsewhere? It has to be India or China.
Hello and welcome to the CNBC TV 18 special coverage of the World Economic Forum. A lot has happened since the last time this event took place. The government has indeed announced a lot of big bang reforms. For instance, the government has opened up FDI and a whole host of new sectors. And today India is the most open economy in the world. And as early as next year, even from a tax laws perspective, India will be one common unified market once the GST is implemented. So clearly the mood here has also been very upbeat. But still, companies are being very cautious as far as putting in the fresh money is concerned. That is because capacity utilization continues to be on the lower side, and a lot depends in the October to December period, that is the festive season for the companies to really make those big investment announcements.
I'm very excited. This government means business, and I live in London and I see the kind of excitement in the investing community. The people want to come, whether it's the technology sector, whether it's the manufacturing sector. People are a little cautious because ease of doing business. They're talking about how much that means. We understand, but I have no doubt with this. I'm looking forward three areas. One is the tremendous opportunity for the world big companies to come in and develop our natural resource to the most advanced and bringing the technology. Making sure that these remain sustainable, environmental friendly, also bring the digital technology where there's a great opportunity that we are doing at this time of the era where we can use the technology and get our things done.
We aren't seeing a big growth in private sector investment. Government investment is certainly taking off, but private sector investment isn't. And unless the balance sheet problems of the firms and the banks get fixed, I don't know whether there's going to be a very quick turnaround. The important factor is the balance sheet of banks and firms. So the balance sheet of some of the big corporations in India is quite weak at this point because of the overhang from a lot of the debt that they took on in the past. While foreign firms don't have that problem. Foreign firms are flush with funds. In fact, they're sitting on very big amounts of cash. So they are able to bring in money much more readily, while domestic investors are still have a bit of a legacy to deal with.
No question that the frictional costs, moving goods around, the GST proposal that we talked about before, are all going to help India continue to progress. And I think that should be the point. Lots of progress, but at the end of the day, this is a global competition. And the competition is with China, with Indonesia, with countries around the world. The key to this over the long run is productivity. So productivity for India to continue on its path and deliver 7 or 8% GDP growth rate for a long time, you have to have a workforce and skill set that allows you to be more productive every day.
I think we are growing rapidly. We need to continue the process of structural reforms. We are undertaking the kind of reforms India has taken through bankruptcy law, national company law tribunal, GST. These are radical reforms which were pending for a long time. We need to continue and sustain this even with greater momentum. Our objective is to drive this growth even further from 7.5 to 8% and then even to 9%. We've made our recommendations on 74 loss and sick making units. Government has moved forward. We've made our recommendations on 22 strategic sales. Government has moved forward. So government is very vigorously moving forward, and government will meet all its targets.
If you start looking at what's happening to goods that are connected to rural economy, like motorcycles growths have now come into double-digit growth after a long time. Okay, if you look at sort of the four-wheelers, the four-wheeler growth typically would come after harvest because the first investment will be in tractor, second in motorcycle, and third in four-wheeler. Right. So I think that rural economy uptick because of monsoon. You're clearly seeing the sign of that.
And the first clear signs in 4 years. I mean, at least the most pronounced signs in 4 years. So do we expect one of the better festive seasons than in the past?
This is very hard to comment on because many factors come into this, and festive season, one shouldn't look at month on month, because this year festive season happens to fall in the month of October, complete. Navratri started on 1st of October, Diwali is on 30th of October, right? So therefore October sales, if you just look at October, has to be higher than last year October, because last year the festive season was split between October and November. Okay. But if I look at the total festive season, starting from 1st of Navratri to end of Diwali period, I do expect that in all the industries that I'm aware of, one would see a better volume than last year.
We won't reach 100% capacity utilization, but I think we will reach what you're talking about, Ronojoy, is about 80-90% utilization. If there will be a pre-buy for BS4 in last quarter and already starting now, if GST happens, then the pre-buy won't be as large, but there will still be some pre-buy. But if the GST is not happening, there will be a huge pre-buy. Okay. So we are planning both ways to be nimble-footed, that if GST does not happen, then there will be a huge pre-buy and then will be a complete downturn in Q1.
People do believe that good times may not be here, but they are, you can see the cloud of good times approaching. So there is a cautious optimism at this point of time. The qualitative change is that the cynicism which had developed in the last 1 or 2 years, saying where is the action, that is disappearing. Because people didn't realize we are a democracy. One or a group of individuals cannot change the country overnight. The consensus has to be obtained. So all that is now emerging. So therefore, I hope this turns into a momentum.
The overall context is very clear. Global economic growth is clearly slowing down. I think IMF estimates also are talking about petering them down. China clearly is also, while still being a pocket of growth, still has its own issues. So I guess that one of the key winners in this entire surrounding of economic gloom is India. So I certainly see India being the beneficiary of a lot of positive flow coming to it as a consequence of both policy, population, and also perspective.
The economy over the last 2 years has been improving, a bit slowly, but it has been. Infrastructure spend has started happening in a bigger way than it happened before, though it's a bit skewed in favor of transportation only. Nevertheless, some improvements have started. You are seeing a lot of action on the ground by government, introducing new policies, solving some problems. So I think, therefore, the atmosphere is improving. Right. However, it's still slow. Right. Surely a good monsoon will help, considering that the last 2 monsoons were terrible. Right. It certainly helped.
There is a clear acknowledgement here in India Economic Summit that there is an uptick in demand, but at the same time there are concerns on jobs or the lack of it. Recent Labour Ministry data suggests that Indian unemployment rate is at a 5-year high, and at the same time we have seen the World Bank warn that up to 69% of Indian jobs could be threatened because of automation. Corporate India believes that creation of jobs will be the immediate public policy challenge for this government.
Sloth in job creation partly also reflects the sloth in investment. That's we're not seeing. I mean, we're not going to get very high levels of investment rates without the domestic private sector also taking off. So that would be one important area. The second thing is growth in India obviously comes from the services sector still. That's still the case. Manufacturing is not a very big part, right? Despite, the efforts are being made, and the hope is that that would happen when investments come in. But until that happens, the service sector in some areas like in IT are not necessarily very, very labor intensive. In the retail sector, yes, there should be. So I think in retail sectors where, like in hospitality, the restaurant business and other things, if you want to have a skill match, you really need to focus a lot on the skilling initiatives and actually visit it and see how effective they've been.
My last question, ma'am, we have a new way of dealing with monetary policy. There's a monetary policy committee in place. It has just recommended a cut of 25 BPS. Do you think going forward, and taking into account the inflation scenario, more space for rate cuts going forward?
We'll have to wait and see. In India, the data on inflation is not very easy to predict, especially because food inflation, which is something that the RBI really can't affect that much, but it still has an important effect on their target inflation rate. Right. So we'll have to wait and see. Commodity prices might be going up. So we just have to be data-driven on this.
Right.
The fact that jobs will get automated is not an issue. And if we don't automate it, we are as obsolete as a dodo. However, the span will increase. Okay. There will not be a single aspect of human endeavor where IT would not become relevant. And if that happens, labor intensity comes down, but because of expansion, you may still have new jobs coming, but it will be different people or people who are trained differently.
As the cost of automation comes down, which of course is good, the crossover point changes. So crossover point where I will invest in a robo has become much sooner than what it used to be, because robots have become cheaper and labor has become more expensive. So therefore, in India, the automation cannot simply be a financial decision. It has to be also a decision based on what is the priority of the country. What do we need? We need jobs.